Welcome to Trading an Edge, the podcast where we break down the psychology, mindset, and system of elite trading. Welcome back to the deep dive. Today, we're really going deep into a truly fascinating area, the inner game of trading. You know, the psychology, the mindset, the system, all that stuff that really defines elite performance. We've pulled together insights from, well, a really powerful stack of sources for you. We've got some profound excerpts on trading patience, our own notes on those common fallacies that honestly trip up even seasoned pros, and even a crisp transcript from a YouTube video focusing on market clarity. Our mission today, it's laser focused. We're going to dismantle a powerful, insidious, and often really destructive myth. It's one that far too many traders unknowingly subscribe to. It's this idea that any single trading day is special, that somehow today is a day you absolutely must perform or make back that loss or see some life-changing opportunity. We're going to reveal why patience, profound restraint, and a long-term perspective aren't just nice ideas, but the actual quantifiable weapons of elite traders. And more importantly, we'll show you exactly how you can apply these insights to your own trading approach, hopefully transform your results. So, to kick us off, let's just hit you with the disruptive truth right away. Because this isn't just theory, okay? It's the absolute bedrock foundation of everything we're going to discuss.
Yeah, here it is. No trading day will ever make or break your career. Ever. The market opens again tomorrow, that's a guarantee. But your discipline, that might not be there tomorrow if you treat today like it's do or die. And what's truly fascinating here, and this is a critical piece of, let's call it clinical insight from our sources, is why this belief in a special day is just so damaging. See, when you elevate one single day above all the rest, you don't just feel pressure. You actually create this intense emotional urgency. And this urgency, it isn't harmless. It triggers a primal sort of fight or flight response in your brain. Specifically within the amygdala. This actually bypasses the rational part, the calculating prefrontal cortex, and pushes you into reactive decisions. It just clouds your judgment, triggers impulsive rule breaking, and inevitably it magnifies your risk. The best traders, the really consistent ones, they understand deep down that the real game is played over hundreds, maybe thousands of sessions, not one single isolated day.
Wow. Yeah, I can really see how that sort of emotional pressure could derail even the best intentions. So, okay, if no single day is special, then what is the core truth? How does the market actually operate? What should our perspective be?
Right. A single trading day is just one of thousands.
Yeah.
Truly. Think of it like a tiny pixel in this massive unfolding picture. The market itself, it operates in continuous cycles. It will always present fresh opportunities. Always. So there is no such thing as a special day. There's only a day where a high probability setup, a predefined statistically favored pattern that fits your system might occur. Or it might not. And in this context, sitting out when there's no quantifiable edge, that is not weakness. It's not missing out. It is unequivocally the highest form of discipline. It's a direct expression of your commitment to your long-term success.
Okay, let's unpack this a bit more. When traders fall for this really seductive special day fallacy, believing they absolutely must act, what are the most common mistakes and frankly the most costly ones they predictably make? I imagine it's a bit of a slippery slope.
Oh, absolutely is a slippery slope. And this belief, it leads to highly predictable, often self-destructive errors. We see three big ones again and again. First, forcing trades. This is driven by this intense need to do something, right? Maybe it's boredom, maybe it's FOMO, maybe just the pressure of feeling unproductive. But this urge, it causes you to take trades that just don't align with your system. You sacrifice the quality of your setups just to feel engaged, to feel like you're trading. Look, forcing a trade when there's no valid, predefined setup, that isn't trading, it's just gambling. You're basically flipping a coin when you have zero statistical advantage.
Right, zero edge. Exactly. Second big mistake, over-risking. Okay, picture this. You just missed a big move. Or worse, you took a frustrating loss. That emotional pressure to make it back can become overwhelming. So you find yourself increasing your position size, maybe extending your stop loss, not based on any logic or your plan, but purely on this emotional hunger to recover what you lost. And what happens? Often it leads to a compounded loss. It turns a small setback into a really significant drawdown. Proper, consistent risk management. It isn't just a guideline. It's the absolute foundation that protects your longevity, your consistency in this game.
Yeah, that makes total sense. And the third one, trying to make up a loss. Losses are not just inherent in trading. They're an unavoidable statistical part of any probabilistic strategy. You will have losses. So that impulsive attempt to make up a loss in one single session, that's a classic sign of poor emotional discipline. It's a short-term reactive mindset. This emotional reaction, it inevitably leads to more mistakes. Why? Because you're operating from fear, from desperation. And that just pushes you further away from your well-thought-out trading plan. You have to learn to detach from the outcome of a single session. Instead, focus on executing well over many, many sessions. Let your statistical edge play out over time.
That's a really powerful breakdown. It sounds like a deeply ingrained impulse, doesn't it? That desire for immediate gratification or recovery. We all struggle with it. So if forcing trades and over-risking are the predictable traps, what's the empowering alternative? What's the hidden power in truly embracing patience?
You nailed it. The alternative isn't passivity. It's active patience. You don't need to force a trade. In fact, you should actively, aggressively avoid it. The best trades, those high probability setups, they aren't something you conjure up. They are essentially a gift from the market. They happen when a specific predefined pattern aligns perfectly with your system, with your quantifiable edge. So the most powerful decision you can make, the one that really speaks volumes about your discipline, is to sit out, to do absolutely nothing when no valid setup is present.
You know, there was this one image, this metaphor from our sources that really stuck with me. It illustrates this point perfectly. It's like forcing trades in a dead market is like trying to sail without wind. You'll just burn through energy, deplete your mental and financial resources, and you end up going nowhere, or worse, backwards.
Absolutely, that metaphor captures it perfectly. Think of your patience as your anchor. It keeps you steady, secure, until the tide shifts, right? Until the wind of opportunity fills your sails. Yeah. It's the active, conscious discipline of waiting for your specific edge, your predefined conditions to show up. Elite traders often spend more time not trading or preparing to trade than actually clicking the mouse. Their patience isn't passive, it's a dynamic strategic choice.
Okay, so let's connect this to the bigger picture now, the deep psychology involved. What does this pressure to act now, this impulse to force trades, what does it truly do to a trader's overall psychology and, critically, their long-term success and longevity?
Well, the moment you believe you must act today, that you have to find a trade, right then and there, you hand over control completely to your impulses, your trading identity, your sense of self-worth as a trader. It should be tied inextricably to the quality of your decisions. How consistently do you follow your proven system? How well do you manage risk? It should not be tied to the sheer frequency of your trades. Longevity in this, let's face it, volatile arena comes from rigorously protecting your statistical edge, safeguarding your capital, maintaining your mental clarity. It doesn't come from chasing every little flicker of price action or reacting to every minor market swing. And this brings up a really important point, something many traders wrestle with, that discomfort of not knowing what's going on in the market. But here's the profound truth, okay? No matter how skilled you become at trading, there are always going to be periods where you simply don't know. And that's exactly how it's supposed to be. Clarity doesn't just exist on demand. It only comes when the market aligns perfectly with your defined, quantifiable setup. Everything else outside of that alignment.
For your system, it's just irrelevant noise. The real problem isn't the natural state of not knowing. The problem is not knowing and then proceeding to act as if you do. That's where you force trades, you rationalize poor decisions, you justify deviating from your plan, and ultimately, you lose capital.
So it's about shifting that internal locus of control, isn't it? Realizing the market isn't always offering what we want and just accepting that. That sounds like a fundamental change in perspective.
Precisely. The market decides when your edge appears, not you. Your meticulously developed trading system. That defines the precise conditions for your statistical edge. But the market, in its own unpredictable rhythm, determines when those conditions actually show up. Your role is simply to be a patient, disciplined observer, like a strategic sniper waiting for the perfect shot. You're not a proactive enforcer trying to bend the market to your will. Understanding this, really internalizing this truth, is absolutely foundational to achieving consistent long-term profitability.
And what's crucial to remember here, as we've already touched on, is that the market will always open again.
Exactly right. Opportunities are literally infinite. Missing one setup doesn't mean you missed this setup. It just means you missed that setup. There will always be another chance, another day, another confluence of factors that aligns with your system. This simple, profound truth. It's the very foundation of a detached, emotionally resilient, and ultimately successful long-term trading mindset. It frees you from that tyranny of urgency.
Okay, so this is great conceptually, but what does this all mean for you, the listener, in practical, actionable terms? Our sources give us a really clear 5-step framework to adopt this essential long-term perspective, to truly master the art of patience.
Right, this framework is basically your roadmap. It's how you transcend that special day myth. Here are the 5 key steps. Step 1. Remove the halo from any single day. Start each trading day with the conscious, deliberate understanding that it's just one data point, one session among many. Mentally prepare for the very real possibility of taking 0 trades and still having an incredibly successful, disciplined session. This isn't just a mental trick. It means actively preparing your trading plan with no trade scenarios. Before the market even opens, consciously decide that a truly successful day might simply mean protecting your capital by doing nothing. Every day is just another page in the vast trading book. Treat it with equal, calm weight.
Got it. Equal weight, no special days. What's step 2?
Step 2. Define no trade as a valid decision. Actively view a day without trades not as a missed opportunity, but as a strategic success, if it means you protected your capital and maintained your mental clarity. By consciously choosing to not trade when nothing is present, when your predefined setup just isn't there, you are actively protecting both your invaluable trading capital and your crucial mental clarity for future opportunities. It's a powerful act of self-preservation.
So no trade is a win in itself sometimes. Makes sense. Step 3.
Step 3, stick to predefined risk parameters.
They
This
are.
one is non-negotiable, absolutely critical. Never, under any circumstances, increase your position size to desperately recover losses or chase missed profits. This unwavering discipline around risk management, it's the single most critical factor protecting your longevity and consistency over time. It prevents a small setback from becoming a career-threatening disaster.
Okay. Risk is paramount. Step 4.
Step 4. Accept market timing is out of your control. Your system, the one you diligently developed, dictates your edge. It tells you what to look for. But the market, and only the market, dictates when that edge appears. Your role is purely to be a patient, present, unbiased observer. Identify if a setup aligns with your plan, and then, only then, execute flawlessly if and when it appears. You are not there to command the market, just to respond to it appropriately.
Right. Respond, don't predict or force. And the final step.
Step 5. Play the long game. This is all about perspective. Judge your success over weeks, months, even years, not hours and days. When a loss inevitably occurs or you feel that insidious pressure starting to build, consciously zoom out. Remind yourself, this one day, this one trade, it's merely a single data point in your statistical age, a single tick in the overall journey. The true game, the only game that truly matters for your long-term wealth, is played out over hundreds, even thousands, of meticulously executed trades.
So consistency then. It's not the result of finding some mythical special trading day. It's the direct result of cultivating a calm, detached mindset, one that understands, fundamentally, that every day is simply another day. By releasing that impulsive urge to act when nothing is truly present, and by putting your unwavering trust in your proven process over a long series of trades, that's when you take the first, most crucial, real step toward becoming a truly disciplined and consistently profitable trader.
Yeah, and this raises an important question, a final thought for you to consider as you move forward. If tomorrow's market opened exactly the same, with the same conditions, maybe the same lack of clear setups, would you make the exact same decision? Would you sit out? Would you wait? Would you protect your capital? The trader who can honestly and confidently answer yes to that question, that's the trader who wins. They win by patience, not by pressure.
That's a really powerful thought to take away. Thank you for diving deep with us today on this. We'll go back soon with another deep dive into your sources. Trading an edge where psychology meets profitability.